Now we have a quick market update.
Okay.
So I just have this little bit of information. So Kaiser, Oregon, this is just to share a little bit of how much obviously homes have appreciated in our area and where the market pricing is at right now. So just to take one little area where we're at, for example, Kaiser, Oregon, that's just north of Salem, Kaiser, they share a school district, very similar. It is the 97303 zip code in our area.
Kaiser.
Yeah, great area.
Dude, that Kaiser station is crazy
right now. I love the
now.
Kaiser station. They just put in a Chick-fil-A.
The Chick-fil-A.
I think it just opened a few days ago.
Yeah, I think the 4th or 5th. This is insane. I haven't been there yet.
Okay, so the average home value for Kaiser right now is $447,000, and that is up from a year ago at this time. It was $382,000.
Wait, it jumped over like 60 grand.
It did. I'm not surprised.
Wow. So say you bought your home last year.
Yeah, you could sell it now.
Odds are you just made 60 grand plus whatever you put down on it.
Yep.
That's pretty impressive.
More if you added value to the home.
Dude, what's that percentage yearly? Because I remember when
18%?
I first 18%.
Isn't that 18%? I don't know, but
it's going to be roughly around that.
Yeah, I don't.
Because we've been going about 20%, 14 to 18% yearly.
It's been
in some
like the last
counties.
couple years in some places in our area. It's been like 20% a year, which is
literally
unhealthily high, but also awesome if you're a homeowner.
High. Yeah, it's awesome if you're a homeowner.
If you own a home.
Because like I said, if you're planning to leave Oregon, like a lot of people have been over the last few years, I'm just saying that's a reality.
And a lot of
people are selling to get out of state.
Are coming here too.
And then the people come here.
Yes.
So it's like, yes, I can still sell my house,
Yes.
but then I have all this equity. Where do I put my money?
Yeah.
They're like, do I invest it? Do I reinvest it in another property? Am I going to buy something cash and live financially free like Dave Ramsey? What do I do?
No, you're not.
I'm just saying, these are real questions in extreme markets that we've never seen. The unpredictability is there. Don't get me wrong. But while we're in it, I'm riding this wave. And my wave's to make some money for you as a seller and put some coin in your pocket. I leave every listing appointment saying that. How can I better you and put coin in your pocket? Say it doesn't work out and you think you can do it on your own and you want an X amount of price. I'm probably not going to be the guy to sell the home for you. I'm not going to puff a home, spend hundreds and hundreds of dollars into marketing, and then expire. Right. Now, I'm that expired listing I was just talking about. That is not my business.
Because as agents, that hurts us.
Yes.
One, it looks bad. And two, it costs us money because every month we're paying for staging. Every month that goes by our listing as it's sold. $2,000. Yeah, we're paying for staging. And then we have professional photos, professional video. It's not, yeah. Anyway, okay.
But there's
back to the market.
There's things that happen. So you as a sellers, take advantage. And once again, it comes down to the real estate communication and advice that you're seeking.
Yes.
So feel free to reach out. If you guys are listening, we are happy to help you with just a general question. Okay. And we do have contact information below.
Yes.
But I do have this article that I'm sent weekly, every Sunday. Our CEO, Berkshire Hathaway, sends it out to us. And I really have pleasure in reading these every day. I usually highlight it and have it read out loud to me just because I'm more of a visual learner.
It's very in-depth, and it's right now. It's like the most current right now information from professionals that are actually like deep in the market with day in and day out. So
all right, so I'm just gonna read it straight off the top. Excuse my reading skills if I get hicked up, but I want you guys to just visualize and listen to this as I do audibly every week. Good morning. Of labor statistics reported this week in real estate that local employment increased by 528,000 in July. Much better than expected in a sign of strength for the job market, which is great. The economy, people are employed, jobs are flowing. The economy has now recouped the 22 million positions lost early in the pandemic and is 32,000 jobs higher than in February of 2020. So if that tells you anything, there's 32,000 people roughly employed more than it was in 2020 before the pandemic. Now, okay, jobs higher. The unemployment rate is now back to its pre-pandemic level and tried for the lowest since 1969. Below, that's a lot of years.
Yeah, that is.
Below are a few newsworthy events from the first week of August that influence our business. So here we go. Our business, real estate. This isn't a housing bubble. That's how this article starts out. Very comforting because everybody, mainstream media, we're in a bubble. It's going to go, guys. With all the headlines and buzz in the media, some consumers believe the market is in a housing bubble. It's only natural for concerns to creep in that it could be a repeat of what took place in 2008. The good news is there's concrete data to show why this is nothing like the last time. There's a shortage of homes on the market today, not a surplus.
Yes.
Back then, there was a surplus. There were so many homes to choose from at a cheaper rate. I mean, honestly. Yeah. But at that time, they were higher for the people at that time, lower inflation. Mm-hmm. The supply of inventory needed to sustain a normal real estate market is approximately 6 months. Anything more than this is an overabundance and will cause prices to depreciate. So we're looking for a 6-month mark until we usually see depreciation in home sales. Yeah. Anything less than this is a shortage and will lead to continued price appreciation. Yeah. For historical content, there were too many homes for sale during the housing crisis in 2008, and that caused prices to tumble. Today, supply is growing, but there's still a shortage of inventory available. One of the reasons inventory is still low is because of sustainable underbuilding. When you couple that with ongoing buyer demands as millennials are into their peak home buying years, it continues to put upward pressure on home prices. That limits supply compared to buyer demand is why experts forecast home prices won't fall this time. Mortgage standards were much more relaxed during the crash. That was a biggie. The mortgage industry was so lax. They were just handing out mortgages. Yeah. Teachers, they had like 5-6 homes. I mean, on a salary, you can't afford that in a bad market. And look at what happened.
They locked down a lot.
Running up to 2006, banks were creating artificial demand by lowering lending standards and making it easy for just about anyone to qualify for a home loan or refinance their current home. Back then, lending institutions took on much greater risks in both the person and the mortgage product offered. That led to mass defaults, foreclosures, and falling prices. So if you're a buyer out there, like I've had over the few years now, man, I'm just waiting for the market to crash. There's going to be a lot of foreclosures, jobs. People are going to become unemployed. They're not going to be able to pay their mortgage. Foreclosure. Man, I'm going to get a house at half price. Well, guess what? The foreclosure process is not the same as it was in 2007, 8, 9, 10, and 11. No. The banks have become greedy, guys, and they're almost acting as real estate agents, making sure that the home is appraised at appropriate value, and you can't actually submit an offer at $200,000 and get an acceptance. You will have to pay that appraisal price in reality if it's owned by the bank. They become greedy. The foreclosure volume is nothing like it was during the crash. The most obvious difference is the number of homeowners that were facing foreclosure after the housing bubble burst. Foreclosure activity has been on the way down since the crash because buyers today are more qualified and less likely to default on their loans. In addition, homeowners today are equity rich. Like we've been talking, if you're a homeowner in Kaiser, you just had $60,000 put in your bank account if you were to sell today, automatically.
Right. With that much equity, how could you default,
Today are equity rich, not tapped out. Yeah. With the average home equity now standing at $207,000. So if you're a homeowner, on average, you own $207,000 worth of real estate, cash in hand if you were to sell. Homeowners are in a complete different position this time. That little short clip of the article, I got about like 5 or 6 more sections, actually 2 more sections. I'm not going to go off on them. There's a lot to unpack there. But that was just a brief comparison, though, of the housing crisis in 6, 7, and 8 to now. And why maybe we're not going to be seeing home depreciation over the next year, 2 years.
Right. And if we do, certainly not as drastic because, like all that said, the things that were going on at that time are definitely not happening.
Just a lending requirements
now. Obviously, anything can happen in this crazy world. Nothing would surprise me, but I still don't think I think things will eventually, and I mean eventually, like not anytime soon, level out a little bit and not appreciate as high. But then that's all I'm gonna say. Sorry, I'm just.
But that's why, I mean, like, if you are looking to be a home buyer, home purchaser, make sure you can afford your mortgage.
Yeah.
And what's nice though is I was just talking about lender requirements. There's reason. There was a bigger and a more rate of foreclosures back then than there are now and will be, because the lending requirement, they actually want to make sure you can afford your mortgage.
Yeah.
And with that being said, I think we're still in a strong, heavy sellers market. There has been a little bit more inventory coming on market. We're at about 2 months of inventory, by the way. And you just heard it on the article. 6 months is normal. Anything above 6, that's where you might see a steady leveling off of home appreciation, and there being slight dips. So
after 6, there'll be slight dips, but at 6,
we're at 2,
it would
guys.
just be even.
We're at 2.
2.
I
2
remember
months.
when it was 3, even 4.
Yeah.
And it was still such a strong market then. I couldn't believe it. So things just took a little bit longer to sell. That's it. It doesn't mean your appreciation, your equity in your home just dissipates and just goes into thin air.
Totally.
It's still there. Reach out if you need us.
And I was, before we end though, I just want to say I saw, and I'm sure we've, said this before on our channel, but it's just so true. I saw I think it was on Instagram or somewhere. I saw someone post something like a realtor or lender the other day talking about, it was just showing like, this was home prices in 1970. This was home prices in 1980. Home prices in 2008. Home prices in that. And it's like, at the end of the day, like we always say, homeownership is such an amazing thing because people bought, like we have worked with home sellers who bought their home for $7,000. Homes will never, I don't care how much they go down or what crazy crash happens, they will never be $7,000 again. Ever. Eventually, over time, real estate goes up, and it is the fastest, lowest risk way to build wealth, and that is a fact. It is the lowest risk way.
100%.
So,
and the most fun with clients that I personally get is when we get to make you some serious money. And the best stories for me is that exact clientele. They bought, something for $7,000-10,000, and they haven't put a dime into it, rented it out the whole time. So the tenant paid their everything. It's paid off, and now they're making monthly, every time. But then when they go to sell it, they're just like, I'm not really being greedy. What's my tax on this? And that's all they really care about, because
they've already made so much.
They're making so much money, and they haven't even put a single dollar into the structure or anything because they found a really good tenant in rental agreement. So
I just think, to end, as I already said again, I just think that I hate when I hear as a real estate agent, like, oh, you're only saying it's a good time to buy because you're a realtor and you want sales, or you're only saying it's a good time to sell because of this. But truly, like from the bottom of my heart, as this is advice I would give myself, because I would buy a house right now.
Well, we did. We bought a house 2 weeks ago.
Right, we did buy a house right now, and I would do it again right now. Yeah. And I would also sell a house right now. So with that being said, I'm someone that knows what's going on in the market, and I would buy myself and I would sell myself. So that's me saying, like, with your best interest in mind, I believe it is a good time to buy, and I also believe it's a good time to sell.
Well, that's it.
Yeah,
That's how we have it.